It's been a rough 2010 for emerging markets so far. Take a look. The MSCI Emerging Market Index off by about almost 5%. That is more than double the drop seen in global stocks. So joining us now to share his thoughts on the developing markets is Attard Montalto. He is the emerging markets economist at Nomura International in London. Good morning, and thank you for joining us. You just heard Nouriel Roubini comment on how he thinks the EU or IMF will come to Greece's rescue. What do you think?
I think he's basically got the right picture there. I mean, markets are questioning a lot the convergence plans of Eastern Europe, given what's going on with Greece. I think the important thing to remember about Greece and the EU in general is it is ultimately a political project. Basically leadership in Brussels is not going to allow Greece ultimately to default and risk this whole EU political project. Equally, there's also a large snowball effect, clearly, to Spain, to Portugal, and into Eastern Europe, Hungary, and the Baltics as well. So we think ultimately there will be a strong degree of support either from the IMF, the EU, through financial assistance. But clearly, it's going to be quite a rough road to reach that endpoint with some difficult cuts needed for Greece.
At what point will that decision come, that support?
Well, I think it's important to reference last year when the EU was dealing with bailing out Eastern Europe, Hungary, Latvia in particular, and the situation developed quite slowly, actually, but according to markets at least. But I think it's important to remember that the EU is a slow-moving beast. It can take some time. We have an important council meeting next week where they will discuss the Greek situation. So I think it can start to move from next week. But the market should bear in mind that ultimately this sort of supranational cushion, as I put it, is in the background, even if they may be a little slow. Okay,
Peter, you look at emerging markets overall. In the BRIC world, of course, you've got fears of tightening in China, and then in Europe, the Greece story, the ongoing Greece story. Which is the bigger concern for emerging markets right now?
Well, I think it's very much a different play between different areas of emerging markets. Eastern Europe is clearly focused on the Greece story at the moment, but into Africa, I mean, that's much more about the China story. And I think the important thing that Nomura often stresses is that the China story is in fact a multi-year event. We already think the PBOC is actually behind the curve on this front, so we don't see the rate tightening in China actually affecting the Chinese growth ultimately, and then spill over effects into emerging markets. And more generally, it's an Asia story into emerging markets in this time zone, in European time zone as well, which can provide a strong support. There are clearly risks around that, and we need to see China moving from being a net sort of investment good importer to being a net consumer good importer ultimately. They need the takeoff of the consumer to really have a strong impact across emerging markets in the European time zone.
All right, Peter, let's also turn to South Africa, which I know you look at as well. It's struggling to recover from last year's recession. What's the outlook for interest rates there? And this, of course, comes after the rand was the world's second best performing currency last year.
Yeah, the outlook for South Africa is very interesting this year. Of course, they have the World Cup right bang in the centre of the year, which can provide a 0.7 percentage point add-on to growth. But underlying growth, we actually think, will be pretty slow to recover, given basically high unemployment, high household indebtedness. The interest rate situation is also very interesting. Basically, we think the mandate of the Central Bank of South Africa will actually change this year. They're going to change from a single inflation target to a dual inflation growth target. This is basically maybe seen by some in the market as a shift to the left, but actually we think they're already a pretty flexible central bank, and it won't actually affect monetary policy overall. Basically, in terms of the interest rate forecast, we look for hikes starting at the end of this year in November, with a slow hiking cycle going on from there. But as you said, the rand was one of the best performing currencies last year. That was because of market speculation around FDI, which actually didn't turn out to come about. And we think South African rand is one of the most overvalued currencies at the moment, and that after the World Cup and positive sentiment around that, it can start selling off back to sort of 9 level as people look at the current account and the fiscal situation.
All right, thank you so much. We've been speaking with Attard Montalto. He is the emerging markets economist at Nomura International in London.